Good morning, everyone. It's Ben Buckner and Dan Bossi with Ag Resource Company in Chicago. Dan in Geneva, Switzerland this week. It's Thursday, May 15th, and we've got markets that are mixed, financial markets a bit weaker, crude is down. The ag space, I do think, is trading fundamentals, or at least the new input we've gotten over the last 24 hours. And the two big things, I think, are biofuel policy, which was very optimistic 24 hours ago, now much less certain. Soy oil is shedding premium as such. And corn demand. US and globally looks very strong. And I think the more work that we're doing, that probably continues for maybe the foreseeable future. And it really hinges upon the explosion that's ongoing in the Brazilian ethanol market. So, Dan, thanks for joining. What else do you got this morning?
No, I think that's right, Ben. When we look at the corn market, it has been very strong. We'll talk about export sales. We did get new numbers this morning from CONAB. This is the Brazilian USDA equivalent. Now they are raising their numbers. We have corn up to 127 or 3 million metric tons below USDA. Soybeans at 168 or a million tons below USDA. Our team's analysis down in Brazil would still indicate that there may be another, million or two to go on corn, maybe 131 or 132. And then on soybeans, we're still comfortable with a 171 a number relative to our crop tour and some of the yields that are coming out. So again, I want to highlight that as we get into September 1st and we get into the U.S. competition, there will be at least 20 million metric tons more of soybeans to sell down in Brazil than a year ago. And I think that's important longer term. Also, I would highlight this morning's export sales. These are numbers that reflect where those sales are. We did, nearly 30 million bushels of wheat, both in an old and new crop position. And important there is 5.5 million metric tons of wheat of SRW and in hard red spring of 8.3. So, very strong wheat numbers. And we're selling Morocco. The talk in the market is that ultimately we'll do somewhere between 200 and 250,000 tons of U.S. wheat to Morocco, business that was not expected. But because of the price drop, we are competitive everywhere in the world, both on HRW and SRW positions. So that's good. Also make sure your corn number there, 66 million bushels. We're now at 2.44 billion bushels for the year. So we're about 160 million bushels, give or take, below the USDA forecast with still a long ways to go in terms of the crop year. So 3.5 months. So as you think about it, all of a sudden that 2.7 billion bushel number we've been discussing on this video seems right. And I believe that U.S. corn demand stays strong. So Mexico still has more business to be booking. So we believe that USDA could come up another 100 million bushels in U.S. corn exports. I think the question is, what do they want to do in feed residual? But we won't know that until the June report. And even of soybeans, 10 million bushels in a known position for old crop, 18 for new crop. We're at 1764 billion bushels. And so we're not that far away from USDA's number. They still need to increase U.S. soybean exports. So both corn and soybeans have the chance to see their export estimates increase within the June WASDE report. The other thing I'll mention to all you clients is that the U.S. and China continue to have negotiations. They had negotiations ahead of the APEC meeting, which is happening in Southeast Asia. So Ambassador Greer met with the Chinese counterparts. They're still pushing the ball down the field. This is important. I still believe that when we get close to knowing what will happen with China, it'll be something similar to a phase one agreement. I say that because a lot of the Chinese negotiators were the same people that are there back in 2020. So they're familiar with that. We think that'll be the odds-on favorite, but the timing is unknown. But they're working hard in this 90-day window. We did see a very sharp drop overnight in soybean oil futures. This graph shows we went limit down. We bounced off that slightly here before the abbreviated close. We're ahead of the 8:30 opening, but there's conflicting messaging in the market. One of the messages is that the EPA yesterday, through, of course, testimony by Mr. Zedlin, the commissioner, indicated that it would be months in a committee that would decide what the RVO would be. That probably means a lower RVO. People were talking about 4.5 billion pounds. That's down about 1 billion pounds from what the industry was hoping for. This morning, or right recently now, we've seen a story on Bloomberg that has indicated that a proposal is heading to the White House. So there's a lot of uncertainty, if you will, in biofuels. And so I want to make sure that the messaging from the Trump administration is very uncertain. Zedlin says one thing, and now we have another very respected news agency saying that the RVO is heading to the White House to be reviewed and approved. I don't know what to say to all of that other than be careful and understand the tea leaves politically what's ahead here. I don't think anything will happen for the RVO for at least another 4 weeks, but nonetheless, we need to keep our ear to the ground and understand a little better what this administration is looking for. We just finished our GrainCom conference, of which Ag Resource is a participant and an owner in. We had a very good conference, over 500 participants. Well, some of the themes were that the wheat people that were there selling wheat to countries like Algeria and others indicated that they were seeing very strong demand for U.S. wheat, and that world wheat demand is finally coming forward. We're seeing that with Saudi Arabia. We expect that Egypt will step forward in the next couple of weeks as their harvest wraps up. So that, along with North Africa, should give us a shot in the arm. I think the wheat market's done enough to the downside. We also spent a fair amount of time talking about the U.S. crop, stripe rust in Kansas and some of those places. Stripe rust you cannot treat with fungicide, and the tour is reflecting upon it. But I really think we've got to give another couple of weeks before we understand the damage and yield loss that is potential in stripe rust. You can lose upwards of 80% yield when stripe rust hits. But again, today, I don't think there's any way we can measure accurately in terms of what the damage will be. The official 30-day forecast came out from NOAA this morning. We have heat everywhere. If you look at this graphic to your left, as we see a very warm middle of May to June that's forthcoming. And then if you look at moisture, equal chances in the central U.S., wet on the east. And I think that's probably the right forecast to go forward. At the GrainCom conference, there was a lot of talk about heat and dryness in the June, July, August timeframe. The weather forecasters, the two that were featured, were almost identical in that forecast. So that gave people a lot of confidence. So I think somewhere at the end of May, after Memorial Day or first part of June, you got to be very careful about being short corn. It's all about managing risk. And I do think there will be some weather rallies that will allow producers and others to reestablish short and hedge positions longer term. So again, don't think that you can slide through this growing season without a couple of very significant weather scares. I think that's probably what's ahead. Whether it means for yield, way too early to say, but I'm pretty confident there'll be some weather scares forthcoming. And in fact, when you look at the 30-day forecast here from the EU weather model, you can see that the plains is expected to be dry. Now, a lot of this is on what's coming in the next couple of weeks, but I would imagine that this weather forecast is probably correct. We'll watch how it all unfolds, but that dryness should start in the west and then creep north and east with time as we head into July and August. So, Ben, that's kind of what we have for today. I think some very interesting markets ahead, and we'll see how this all kind of plays out longer term. But, you know, I don't think I would be wanting to step on wheat prices here. Corn market is probably a dime from some very key support. Soybeans, a lot of it depends on the RVO, which the messaging is uncertain. But we also believe that the U.S. and China are in the background trying to get a deal.
Yeah, that all makes sense. And I think wheat, we've talked a lot about just how incredibly short the spec community is, not in the U.S., but in Europe. We've all been waiting for that position to be covered. But I do think you got to think about just an absence of new sellers in wheat, if nothing else. I think that's what that implies. And weather is going to be critical. Our work suggests there's not a lot of room for error. We'll see how it shakes out. But I think generally speaking, and this is always the case, but the USDA's May WASDE, every category of the balance sheet, the U.S. especially, subject to revisions meaningfully because of weather, trade policy, biofuel policy. So yeah, being careful, I think, is the message, and we've all just got to be engaged in the markets every hour, every day. It's the only way to really properly manage risk. So yeah, it's going to be an exciting couple of months. I think we're just kind of starting that process now. And so all the best today and this week. And Dan, do you have any final words from Geneva before we close out?
No, you can always take a trial of our services for $1.30 a day and get specifics from us. But I would also emphasize that maybe the July-December corn spread starts to find some heart here, Braveheart also. And I wouldn't want to be short that, because I think as this export program goes on, you're going to find that old crop corn stocks are going to get very tight. But everybody, have a great day. We'll be back. And sorry for the length of this one, but there's a lot going on, whether it's trade or EPA or weather. Stay in touch with Ag Resource. We'll try to lead you through all this. Be well, everybody.